I analyzed Roivant sciences and it was a tough one. Lots of medical terminology and some of the stuff was difficult to understand. But I fought through it just for you guys. It's definitely an interesting stock to talk about right now. And I managed to break it down in a way that the average investor could understand. It's been on the rise ever since 2022, and things have really heated up for it after its recent Q1 earnings report for fiscal year 2025. The stock is sitting just below its all time high, and there's definitely some buzz around what's coming next for this company. So, in this video, I'm going to break down some of the key driving factors for the stock and what's affecting its price. So, what exactly does Roivant do? Roivant's business model is unique. They don't operate like your typical pharmaceutical company. Instead, they create these little subsidiaries, which they call vants. Each one of these vants focuses on developing a specific drug or technology. If things go well, they either commercialize the product or more often than not, they sell it for a hefty sum. One prime example was Roivant sold Telavant to Roche for a dropping $7.1 billion. dollars. This model of building something up and then securing a big payday is a key part of why Roivant has been so successful. But let's not get too caught up in the numbers right away. I want to dive deeper into what they're working on right now, especially the key drugs in their pipeline and the challenges they face. So first off, let's talk about VTMA. VTMA is one of Roivant's most important products. It's a topical cream used to treat psoriasis. Now, psoriasis isn't exactly a small market. So the expectations for this drug were sky high when it first was launched. People thought it was going to be a $1 billion blockbuster. Unfortunately, it hasn't quite lived up to the hype, and at least not yet. VTMA pulled in around 18.4 million in Q1 2025, which isn't bad, but it's not setting the world on fire either. To date, about 430,000 prescriptions have been written by 16,000 different doctors. And while the numbers are going up, they're just not as high as people were expecting. That being said, there's a huge opportunity for VTMA. Roivant is waiting on FDA approval to use it on another condition, atopic dermatitis. If it gets the green light, that could give VTMA a significant boost and it help finally reach the blockbuster status everyone's been hoping for. So while the psoriasis numbers aren't blowing anyone away, the potential for growth is still definitely there. Now, the next thing I want to talk about is batoclimab. This one's a bit more complicated. Batoclimab is another promising drug in Roivant's pipeline. It's currently in phase 3 trials for myasthenia gravis, a pretty rare autoimmune disease and thyroid eye disease. The problem is that batoclimab has been raising some eyebrows because of the safety concerns. There's evidence that it can cause elevated cholesterol levels, which is obviously not something you want to see in a drug you plan to market widely. That's a risk for sure, but Roivant isn't throwing in the towel on it just yet. They're also working on a next-gen version of the drug called IMVT-401, which they hope will solve some of these issues and offer patients a version that can be self-administered. That's a big deal because self-administration could help make this drug a lot more appealing to doctors and patients alike. But here's where it gets a little tricky. Batoclimab is not the only player in town. It's competing with a bunch of other drugs that are already on the market or in development. So even if batoclimab makes it past the finish line, it's going to have to fight hard to win market share. And competition in the autoimmune space is fierce. Then we have brepocitinib. Brepocitinib is another drug in Roivant's pipeline that's caught some attention. It's a dual PYK2/JAK1 inhibitor, which basically means it targets a specific pathway involved in autoimmune diseases. It's still in phase 2 trials, but the results have been promising so far. That's great news, but again, we've got some stiff competition here. There are other drugs already on the market, and they've got a head start. Brepocitinib's challenge is going to be carving out a niche for itself in a space that's already pretty much crowded. What I like about Roivant, though, is that they're not putting all their eggs in one basket. They've got multiple drugs in the pipeline, and while each one faces its own challenges, the potential upside is huge, even if one or two of these drugs hit big. Now let's talk about the leadership and the cash they have. Roivant was founded by Vivek Ramaswamy, but these days it's run by Matt Klein, a former Goldman Sachs guy. Now I know what you're thinking, bankers running a biotech company, but here's the thing, Roivant is sitting on a massive cash pile right now. Thanks to that $7.1 billion deal with Roche, they've got about $5.7 billion in cash as of Q1 2025. That's a lot of runway to keep their pipeline going, and it gives them the flexibility to either develop their drugs or sell them off, depending on what makes the most sense. So what's the outlook? This next year is going to be a huge one for Roivant. They've got multiple late stage trials wrapping up, and the data from these trials could make or break the company's future. This means we're going to see some serious price swings in the stock as news comes out, and investors will need to have some strong stomach for volatility. But if the data comes in positive, especially for VTM on Betoclimab, Roivant could be in the prime position to break out even further. So risks, yes, there are risks. Roivant is cash rich and they've got a lot of irons in the fire, but each of their key drugs faces challenges. Whether it's safety concerns, competition from bigger players, or just the unpredictable nature of drug development. There's no guarantee that everything will go according to plan. Investors need to be cautious and keep a close eye on how things develop over the next 12 months. But let's be real here. No one invests in biotech without understanding the risks. If you're looking for a stock with potential for explosion growth, then you've got to be willing to take on some uncertainty. That's just part of the game. So Roivant Sciences, it does offer a unique opportunity in the biotech space, thanks to its innovative business model. It does have a promising pipeline and lots of cash. While there are undeniable risks, whether from competition, safety concerns, or the volatile nature of drug development, so Roivant Sciences does offer a unique opportunity in the biotech space thanks to its innovative business model, promising pipeline, and strong cash position. While there are undeniably some risks, whether from competition, safety concerns, or the volatile nature of drug development, Roivant's potential for explosion growth is hard to ignore, in my opinion. With major trials wrapping up and FDA approvals on the horizon, the next year could be pivotal for this company. For investors willing to stomach some uncertainty, Roivant presents a high risk, high reward scenario. So if you're up for the challenge, you might want to check the stock out a little bit more closely. Let me know what you think in the comments below. Are you bullish on Roivant or do you see too many red flags? Hit that like button if you found this helpful and make sure to subscribe for more stock breakdowns just like this one.